Imagine waking up to the news that a single decision, a single publication in an official Gazette, has just changed the financial future for millions of people around the globe. The long-awaited moment that dinar holders have been anticipating for years is finally here, sending shockwaves through the global currency markets and sparking a frenzy of activity from Baghdad to New York as investors and speculators alike scramble to understand the full implications of this historic revaluation of floating. The Iraqi dinar, a move that promises to reshape the economic landscape of the Middle East and beyond. But before we break down the monumental details of this announcement, you need to understand the reality of the market just hours before this news broke, a reality of stability and quiet fluctuation that makes today's event so extraordinary. If you were to check the currency markets this very morning, before any of this news was officially confirmed, you would have found the Iraqi dinar trading with a familiar and predictable stability, with the US dollar valued at approximately 1,310 Iraqi dinars, a rate that has seen minimal volatility, edging up just 0.01% from the previous session to solidify its position in a tight trading band that has defined this currency for months. This stability is not new. Throughout the past week and month, the dinar has shown remarkable resilience against the dollar, with a 30-day average hovering around the same mark and a volatility rate so low it's measured in hundredths of a percent, indicating a currency that is effectively managed and pegged, not one on the brink of a spontaneous, explosive revaluation. In the local markets of Baghdad and Erbil, this stability translates to direct numbers, with exchange stores setting their selling rates and buy rates based on this established central bank framework, figures that reflect the practical, on-the-ground value of the currency for everyday Iraqis and businesses prior to this earth-shattering news. This pre-announcement stability is the direct result of deliberate policy from the Central Bank of Iraq, which has utilized the nation's substantial foreign exchange reserves, reported to be in the range of $94 to $97 billion, to actively defend the dinar's value and smooth out any potential shocks from the global oil market or regional political tensions. So while the online world has been saturated with hopeful rumors and speculative hype about an imminent windfall, the cold, hard data from every major financial platform and economic indicator painted a very different picture. One of managed stability, not revolutionary change, which is why the official confirmation we are reporting today is so unprecedented and why you need to keep watching to separate the facts from the fiction that has clouded this topic for far too long. Now let's talk about the twist that most analysts completely overlook, the secret engine that has been quietly positioning Iraq for this very moment. The massive, multi-billion-dollar regional economic integration with the Gulf Cooperation Council, or GCC. While everyone was focused solely on Baghdad, the real story was being written in boardrooms in Riyadh, Abu Dhabi, and Davos, where the GCC Secretary General himself has been championing the Council's role as a pillar of global economic stability and a driver of unprecedented diversification. This isn't just about speeches. This is about hard cash and strategic partnerships. Saudi Arabia and the United Arab Emirates have already invested a staggering $6 billion in Iraq's development projects, a clear signal of deep confidence in Iraq's future, and a move that directly strengthens the dinar's foundation by backing it with tangible infrastructure and economic growth, rather than just empty promises. The UAE stands out as a particularly strategic collaborator, with its Abu Dhabi Ports Group signing major maritime agreements and its world-renowned energy company, Masdar, launching massive solar projects to solve Iraq's chronic power shortages, thereby fixing a critical piece of the national infrastructure and making the country infinitely more attractive to foreign investment. This regional backing is a game-changer because it connects the Iraqi dinar to the most powerful and stable economic bloc in the Middle East, a bloc whose collective growth is projected to surge to 3.2% in 2025 and 4.5% in 2026, according to the World Bank, creating a rising tide that was always destined to lift all boats, including the Iraqi dinar. So, when this historic Gazette publication hit, it wasn't happening in a vacuum. It was the culmination of years of quiet, strategic preparation, building a resilient economic fortress that most casual observers completely missed because they were too busy chasing sensational headlines instead of following the real money and the powerful regional alliances that truly dictate long-term currency value. Now, let's pull back the curtain on the real engine that dictates the value of the Iraqi dinar. A factor so powerful it overshadows every rumor and every piece of speculative news you will ever hear. The relentless flow of crude oil. The undeniable truth is that Iraq's economy is fundamentally tethered to its oil exports, which account for a staggering over 90% of the government's revenue and are the single greatest source of the US dollars that the Central Bank of Iraq uses to defend the currency's value. This isn't just an economic statistic. It's the lifeblood of the dinar, and it means that the currency's fate is intrinsically linked to the production numbers from Iraq's southern oil terminals and the constantly shifting prices on the global oil market. When oil prices are high and exports are flowing uninterrupted, the central bank's foreign exchange reserves, which were reported at a robust $94 to $97 billion in mid-2025, swell with incoming cash, creating a formidable war chest that allows the bank to maintain the dinar's peg and ensure the very stability we see in the official exchange rate of around 1,310 IQD per USD. However, here is the critical twist that most hopeful investors fail to grasp. This very stability, backed by billions in reserves, is precisely what makes a sudden, dramatic revaluation so unlikely in the short term. Because the central bank's primary mandate is not to create overnight millionaires, but to ensure domestic price stability and maintain a competitive financial system. A goal it achieves by meticulously managing the exchange rate within a tight band, not by setting it free to exchange. But the plot thickens further when you consider the intense behind-the-scenes pressure from the International Monetary Fund and other global economic bodies, which are persistently urging Iraq to implement deep structural reforms, diversify its economy away from its crippling dependence on oil, and improve transparency in its financial systems. The real conversation in the halls of power in Baghdad and Washington isn't about a magical revaluation. It's about a much more technical and nuanced process known as redenomination, a plan the Central Bank of Iraq first announced as far back as 2010, which involves dropping 3 zeros from the nominal value of banknotes to simplify cash transactions. But, and this is the most crucial part, would leave the actual value of the dinar completely unchanged. This is the ultimate bait and switch that has confused investors for years, where a logistical change to make the currency easier to use in everyday life is often mistakenly celebrated as the long-awaited revaluation windfall. And just when you think you understand the playing field, a new layer of complexity emerges: the intricate dance of international politics and banking compliance. In early 2025, the United States took action against 5 Iraqi banks, banning them from US dollar transactions as part of a broader effort to curb money laundering and the illicit flow of dollars to Iran and other sanctioned entities. This move sent shockwaves through Iraq's financial system, creating temporary dollar liquidity crises and highlighting a profound vulnerability. The dinar's value is not only dependent on oil but also on Iraq's ability to navigate the complex web of international banking regulations and to reassure the global community that its financial sector is clean and compliant. This is the high-stakes game that is really being played, far from the noisy online forums. The path to a genuinely stronger dinar does not run through a government gazette announcing a miracle. It runs through the slow, hard work of economic diversification, lasting political stability that can attract foreign investment beyond the oil sector, and successful negotiations with the IMF that unlock new lines of credit and technical support, building a modern economy that can stand on its own 2 feet. So while the dream of a quick profit is alluring, the reality is that the dinar's future is being written by oil tankers, IMF staff reports, and central bank policy meetings, a much less glamorous but infinitely more truthful story. So, after absorbing all of this information, the stable peg, the immense oil wealth, the pressures from the IMF, and the promising digital leap, where does that leave you, the investor and dinar holder, today? Let's be unequivocally clear. The fantasy of a sudden, miraculous revaluation that turns a few $100s into a fortune overnight is a dangerous and costly myth that continues to be peddled by unscrupulous sources preying on hope. A myth that every piece of hard data from the Central Bank of Iraq and analysis from the International Monetary Fund thoroughly debunks. The real, tangible path to a stronger Iraqi dinar is not through a secret government decree, but through the slow, arduous, and unglamorous work of structural economic reform. A path that Iraq has indeed begun to walk, but one that is a marathon, not a sprint. The IMF has been explicit that Iraq's economy is facing considerable headwinds, with a large fiscal expansion in recent years increasing the nation's vulnerabilities and making it acutely sensitive to drops in the global price of oil. to the point where the oil price required to balance the national budget jumped to around $84 in 2024, a significant increase from $54 just 4 years prior. This means that without the sizable fiscal adjustment and ambitious structural reform agenda the IMF is calling for, Iraq's fiscal deficits and external accounts are projected to deteriorate further over the medium term, which would maintain pressure on the dinar, not relieve it. The necessary reforms are not simple. They involve politically difficult decisions like comprehensive public wage bill reforms, limiting mandatory hiring, introducing a general sales tax, and urgently reforming the public pension system by potentially raising the retirement age. This is the real battlefield where the dinar's future will be decided, in parliamentary debates over tax policy and in the successful implementation of digital payment systems, not in the cryptic messages of online gurus. Therefore, your strategy must evolve from passive waiting to active and informed monitoring. The key indicators you need to watch weekly and monthly are not the rumors on forums, but the official reports. Track the CBI's foreign exchange reserves, which stood at a substantial $94 to $97 billion in mid-2025. Monitor Iraq's oil exports via SOMO reports. Pay close attention to any new IMF updates and Article 4 reviews. Stay abreast of OPEC Plus decisions that impact global oil prices. And crucially, follow the concrete progress of the Central Bank of Iraq's digital transformation, which after a bit budged, crucially, Central Asia's owner, the stock theory itself, has already seen digital payment volumes skyrocket from 2.6 trillion Iraqi dinars, a clear sign of a system modernizing from within. This is the data that will give you a true signal amidst the noise. Now here is my final and most important call to action for you. If you have found this deep dive into the realities of the Iraqi dinar valuable, if you appreciate getting the facts, the data, and the expert analysis instead of the hype, then you need to take 2 decisive steps right now. First, subscribe to this channel and hit the notification bell, because we are committed to being your source for clear, data-driven analysis, and we will be here to break down every new development, every IMF report, and every central bank announcement as it happens, giving you the context you need to make informed decisions. Second, and this is critical, I want you to put your new knowledge to the test in the comments below. Tell me, based on what you've learned today, what do you think is the single most important factor that will influence the dinar's value in 2026? Is it the success of the digital payment revolution, a breakthrough in negotiations with the IMF, or perhaps something else? I want to hear your informed perspective. Let's build a community of savvy, educated individuals who can navigate these complex markets together. Your financial future deserves more than hope. It demands knowledge, and you have just taken a powerful step toward acquiring it today.